What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we continue to pull back after we broke that support on Friday, and we are still in a falling knife scenario, but there are some very critical support levels just a couple of percent away that you will want to pay attention to. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today SPY was down 2.08%. And we did lose that support at 416, which is also our 20 simple moving average. So we need to be very cautious trying to catch a falling knife. The falling knife means that we have no idea where SPY is going to find support. So you can imagine if this was a knife falling out of the sky, if you're just blindly buying at support levels without waiting for price action confirmation, you can continue to get cut by the falling knife. Now keep in mind, I have this arrow on where we are likely heading, and that does take us into very early September. But also remember that we could get there sooner because the bears do like to take the elevator down, and there is still the possibility we go deeper than where I drew the arrow. So don't just blindly assume that is as low as we can go and we cannot go any lower. We have to treat this as a falling knife until we see some type of confirmation that we're bouncing. Now on Friday we did lose our support trend line, and that was our sign to get risk off, which is exactly what you should be doing when you're going long and you lose support. You need to understand that you do not want to lose your profits and you need to lock them in. And if some of you are still not sure what risk off means, it essentially means you are just sitting in cash, waiting until the stock market gives you more clarity. Whether or not we go up or down tomorrow is anybody's guess, and you can flip a coin and find out with a 50-50 chance and likely end up half of you will be correct and half of you will be wrong. But the only way we know where the market is going from here is waiting for price action confirmation. So with today's close, we did not get any more clarity that this pullback is over, and it looks like we could still have more downside. And do not forget about the back test where the average drawdown from the date of the signal is still down here right around 406. So if SPY is going for the average drawdown from today's close, that is still about another 1.78% lower. So it will be worth your while to just be patient and wait to see where price action goes from here. There is a very obvious gap to the upside because we did gap down, and that gap does fill around the signal level, which is at SPY 421. So if we do start to bounce, we'll need to clear back over 416, and then we can get more bullish for the gap fill at 421. So you're risk off ever since we lost support on Friday, and you're not starting to get more risk on until SPY can at least start showing signs that it can get back over 416. If we go up to 416 and get rejected, that is likely going to be a lower high, and we're going to more than likely see SPY 408 and then 406. And if we lose this support zone around 406 to 408, that is going to look extremely bearish, which means we're going to have a very quick trip down to about 400 yet again. So treat this like a falling knife and be responsible, and we are seeing an increase in volume as we're selling off, so this is not something you just want to completely be blindly buying the dip and just ignore all risk management. Now the good news for the bulls is the bulls are coming off of a bullish market structure, so there is still a real possibility the bulls are trying to look for the next higher low where they're going to buy the dip before the next higher high, and then go take a lot more energy up there to battle the bears sitting up there right around SPY 430. Now also keep in mind, even in the pullback scenario, if we do get a bounce, let's just say as soon as tomorrow, and we go up here and fill this gap, there is still the possibility that is also going to be a lower high, and then we continue for that final leg lower to get the complete pullback, and that is still a very valid scenario. So you need to understand you are risk off below 416, and you are only getting more risk on long positions above SPY 416, and that will become your risk level, but you are going to wait until price action can break above that level. Now if you have not seen the video on where I got the back tested data, that video is worth your while because it does tell you that this is a very expected pullback over all of the cases we've seen going all the way back 35 to 50 years. And then from here, we have very positive looking forward returns. So the odds still do favor the bulls to buy the dip around this strong support zone. So that is the levels I will be watching very closely on SPY in the near future. On the NASDAQ 100 triple Qs, we were down 2.63%, and on Friday we also had the triple Qs breaking through our support trendline, which was an instant sign to get more risk off because we were starting to lose support. Today we see a big gap down, so we do have a gap to fill to the upside, and we also did close below our 20 simple moving average, and we closed right on top of that support at 314. So 314 is going to be a potential area of interest for the bulls to buy the dip off of. So if we do start to see a positive bounce off of 314, you can buy off that level and use that as your risk level. for the obvious upside gap fill at 322. Now, if we lose support at 314, you're instantly getting more risk off because we are likely going for that next leg lower, which is going to be at QQQ's levels of 307.5. So use 314 as a risk level, and do keep in mind this is still a falling knife until we start breaking out yet again, which is going to require the QQQs to get back over 324. So play it day by day and use great risk management. And do remember, as long as the QQQs hold support, we still have the possibility of a higher low, which is still going to be a bullish structure. We just don't want to guess where the higher low is going to be. We want to wait for price action to confirm it. In the Dow Jones, we were down 1.86%, and the Dow Jones came back down to the 20 simple moving average, which is that support zone right around 330, but did not fully close the gap at 329. So there could be a little bit more room to the downside to fully close that gap. Now, we did gap down, so we have a gap to fill to the upside as well, which is up there at 336. And you're going to get a lot more risk on above 333 for that gap fill at 336. Like I said with the other indices, these are falling knives, so you need to manage your risk very tightly. So do that on the Dow Jones right around 330 and 329. And if we break down below 329, look for the next support at 324. On the Russell 2000 IWM ETF, we were down 2.06%, and IWM did close down below support and the 20 simple moving average, and that support level was sitting right there, right around 190.6. So if we continue to break down below this level, we could come all the way back down to about 182.5. And we do have a gap to fill to the upside. If we start breaking back above 191 to 192, you will want to look for that gap fill at 194, and then we still have resistance at 196. Keep in mind, all of the indices broke down their support trend lines on Friday, and that is why we are seeing a continuation of the pullback. So treat all of these as falling knives until we find support. On the ARKK ETF, we were down 2.42% today, and ARKK is still finding support right around that support zone at 43. But do keep in mind that it is extremely bearish while it's below 47. So you do not want to be blindly buying this ETF in the long position side unless you are very serious about this in the long term, which I do not think is a great idea. I would trade this as an ETF that is only tradable. I would not bother investing in this ETF personally. Now you're getting more risk on if we can break above 47, but that is going to be a great level for shorts to enter at. So I do think 47 is going to be a very strong resistance. To the downside, you're looking for possible support levels at 43 and then 40. On the VIX, we were up 15.64%, with the VIX spiking off of that support zone right around 20 and coming all the way back up to resistance at 24. Now you can see the VIX instantly found resistance at that level, and the VIX does have a gap to fill to the downside, which the bulls could use to start crushing the VIX and try to get a leg higher. We're going to be a lot more risk off if the VIX does start closing above 24, so keep that in mind. And the next time the VIX closes down below 20, we should have a continuation of a sustainable bull rally. On Bitcoin, we're currently down 1.7%, and Bitcoin is getting rejected from that resistance right around 21,600, and we have potential support sitting down here right around 20,800. If we lose that support, look for a retest of 19,000. And do keep in mind that crypto winter is likely ending sometime in September. So if you are bullish on Bitcoin in the long term, these are still long-term accumulation levels, so do keep that in mind. If you're trading Bitcoin and you want to wait for a bullish breakout, you're waiting for the break back over 21,600 and then the breakout back over the 20 simple moving average at 23,000. On our big tech hot stocks, we have Amazon pulling back 3.62% today and coming all the way back down to the support trend line right around 133. Now, if we lose this support trend line, you've seen how quickly the selling can continue to pick up. So below 133, you want to be a lot more cautious to the downside for a retest of 128, 125, or the full gap close at 122.8. To the upside, we need to break back over 134 and 136, and then we could start talking about the gap fill right around 138. But you need to be a lot more risk off if we lose that support at 133. On Microsoft stock, we were down 2.94%, and Microsoft also gapped down and closed below the 20 simple moving average. So while we are below 283, you want to be looking for that next critical support down here right around 274, and then the bull breakout level right around 273. If we lose that support, we're coming all the way back down to 267. And that will be extremely bearish if we do retrace all the way back down to 267. So if it's going to remain bullish, we should see Microsoft holding this breakout look as a successful retest, and then we'll be looking for Microsoft to march back higher and fully close the gap at 286. On Nvidia stock, we were down 4.57%, and Nvidia lost the support trend line with today's price action, so there is the possibility that when we get a bounce, it's going to be a lower high before we make another leg lower. If we bounce and close the gap and find resistance at 178, look for that next leg lower at 165 and then 161, or the full gap close at 158. If we can break back over 181 and get back over that support trend line, that will look a lot more bullish, but keep in mind that will still be a lower high, so you will need to manage your risk at that support level at 180 if we do indeed break back over support before we go for the next leg lower. On Tesla stock, we were down 2.28%, and Tesla did close back down below the 20 simple moving average and is very close to the support zone right around 851. Above the 20 simple moving average will likely go close that gap right around 905 to 906. And if we go back over the gap, you're looking for strong resistance around 928. Keep in mind there's still the possibility that Tesla is just consolidating in a trading range and building energy to go battle the next all-time high resistance. So if you continue to see Tesla going sideways, the trading range is going to be between 851 and 928. On a breakdown below 851, we could come back down to retest 816 and then 775, and that will be extremely bearish if we do lose that support. On Apple stock, we broke down below the support trend line today after gapping down and closing near the low of the day, so we are very likely going to completely close the gap and test the 20 simple moving average as support at 166. But keep in mind, this is still a falling knife scenario while we're losing support. So if we don't find support at the gap fill, your next support level will be down here right around 163. And then below 163, you're looking for the gap fill at 157. You can stay bullish on Apple above 166, but you need to get a lot more risk off if that support level fails. And to the upside, you're looking for the gap fill at 171, even though we will have resistance at 170. On the financial sector, we were down 2.2% today, coming back down to the 20 simple moving average and very close to closing the gap to the downside. The industrial sector was down 1.9%, also coming back down to the 20 simple moving average, and still has a gap to fill to the downside if we continue to trend lower. The healthcare sector was down 1.31% today, closing back down below the 20 simple moving average, but overall still in a bull trend and still trying to push higher with very strong resistance at 134. The energy sector was down 0.19%, continuing to find resistance around 79.5, and on a bull breakout, look for the gap fill above right around 81. You can stay bullish on the energy sector as long as we're above 76. So jumping back over to the S&P 500, remember to use great risk management while we are slicing through support levels in the falling knife scenario, and understand what it means to be risk off, because ever since we lost support on Friday, we are in a risk off market until we find support and start to see the bulls buying yet again. This isn't the time to be losing your mind, just have a trading plan and understand that losing support just means you need to be more patient until you start seeing where the market wants to go, because guessing from here can be very dangerous and you will get lost in the chop of the market if you don't know where it's going. So do not be afraid to just be patient and watch the price action until we get confirmation of a bounce. Overall, the market structure is bullish as long as we find support at a higher low, so keep that in mind, but we cannot predict the future. We have to watch price action and wait for confirmation. Also, remember, I have the Stocks Channel Discord where I'm giving intraday updates on the price action and letting you know exactly what I see developing intraday, which is going to help you better understand where the market is trending, and you will get all of my intraday analysis throughout the day. You can find out how to join the Stocks Channel Trading Discord community by clicking on the link in the description below. I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF QQQ and sends you all of your buy and sell alerts directly via email and text message. If you're interested in learning more about Bank or want to subscribe, you can click on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.